Hello and welcome back to a new video from my channel. Are you following stocks as an investor or trader or just out of interest? Well, my name is Jimmy Lapping. I'm a psychologist and statistician with an interest in a wide variety of research topics, including the financial markets and statistical models to make sense of financial markets. And in this video, I discuss some trends in intraday direction and dispersion in European stocks from early September of last year until the end of the month of January that just finished. Here you see a sample of 49 European large and mega cap stocks that are listed on at least one large and mega cap index in the Eurozone, and in most cases are part of the European Euro Stoxx 50 index. On the horizontal axis, these 49 stocks are positioned according to their median percentage difference of the daily closing price relative to the opening price of the day, and the vertical dashed line is the median of this sample. And on the vertical axis, we find a measure of dispersion in the percentage of difference of the daily high relative to the daily low, or in other words, how many percent higher the daily high is compared to the daily low. And here the horizontal dashed line indicates the median of the sample of 49 stocks. Now let's have a look at a few companies that stand out. To begin with, Adidas, or ADS.de, which is part of the German DAX 40 index and is part of the consumer discretionary sector, or in other words, the more cyclical component of the consumer segment. This one stands out in terms of its daily trend, with in this case a clearly negative trend or move lower from daily open to close. Next, here, top right, Adyen, with the ticker Adyen.es, which is a tech company in the payment services listed on the Amsterdam Stock Exchange. This one is actually down on the year because it witnessed a rare crash sometime mid last year, but then had a very good recovery. And as a consequence, if you got in, let's say in September, you could have actually made good money investing or trading. Note that Adyen also stands out in terms of volatility, having the highest percentage difference between daily high and low, and in that sense creating good opportunities for day traders to make money. Next, second highest on the dispersion index and third poorest on the trend dimension is utilities and renewables company EDPR, listed on the Lisbon Stock Exchange. Utilities in general haven't had a good period, and this company is an example of that pattern. And finally, with a modest and below median but still positive trend, and at the same time relatively low dispersion, we find Unilever, or UNA.AS, a consumer defensive or staples giant listed on the Amsterdam Stock Exchange. And whilst consumer defensive is well known as one of the more defensive parts of the stock market. Now, apart from companies, we can also have a look at different groups, which are here in some cases sectors and other cases industries, and are here the somewhat bigger and more color intense dots. When we put names to these bigger dots, we see that staples and insurance are at the lower end of the dispersion dimension, reflecting relatively little intraday movement. Although, of course, all kinds of factors can contribute to temporary moves in a given stock, traditionally staples and insurance stocks are not among the most volatile stocks. Nevertheless, when we look at the three groups which perform best on the intraday trend dimension, we see that more volatility is not always a bad thing. Of the three groups under comparison, tech scores highest on both intraday dimensions. And the other two groups in this yellow area, insurance and industrial, well, they have below median dispersion. And finally, the two groups that performed most poorly in terms of intraday direction are automotive and luxury, and one may wonder if this is somewhat of a reflection of what the economy is like these days. With elevated inflation levels throughout the previous year, consumers are likely to see themselves forced to make choices regarding expenses, and things like new cars and luxury goods may well be first on the list to be cut. Of course, this is just common sense speculation, but it is a possible explanation for the observation that these two groups distinguish themselves in terms of their downward trend tendency throughout this time window of 5 months. Okay, that's it for this video. I hope you find this useful, and if you have any ideas or suggestions for future videos, you can leave a comment below this video or just drop an email using the email address that I've shared below this video. Thank you for listening, have a good day, and see you soon.